This is Mike Swanson, and you're listening to the Wall Street Window podcast. The odds are that you have found out about this because you got an email from me by being a member of my email list. If you're not on it, click the link associated with this post or this YouTube video to get on it. And if you just happen to find this on YouTube, subscribe to this YouTube channel so you'll get all of my future market updates, and also click that bell, and then YouTube will also send you an instant notification when the next video is posted. In a few moments, I'm going to be speaking with a very special guest. I'm going to talk with Jordan Roy-Byrne, who runs the website thedailygold.com. We're going to talk about what's happening with gold and mining stocks, because gold is testing its all-time high set 8 years ago. And I'm getting emails from many people worried that that means it's time to sell, or that some sort of gold collapse is imminent. So we're going to see what Jordan Roy-Byrne of the Daily Gold thinks about that. Before we speak with him, though, I want to tell you, one of the things happening in the financial markets today, in the trading world, is several exchange-traded funds have completely malfunctioned and are now being taken off of the stock exchange. Let me give you a list of them. UGLD, destroyed. USLV, destroyed. DGLD, destroyed. DSLV, eliminated. VIX, gone. TVIX, one of the most popular ETFs, completely eliminated. UGAZ, destroyed. DGAZ, destroyed. What's happening? These are triple ETFs that malfunctioned over the past few months, and the volatility in the market that happened in March and other events have caused this several exchange traded funds to completely explode. These have been very popular things for people to trade. In fact, if you go on Robinhood and look at the top 100 list, there's still some other crazy ETFs on there. And the problem is these leverage ETFs, the more leverage they use, the more they tend to diverge away from the real index that they're trying to track. And this causes all kinds of problems and chaos. To give you an example, the JNUG short ETF, the JNUG long ETF for gold stocks, it was a triple ETF, and then Dust, which is a triple short ETF, both have collapsed. One is supposed to go up and one is supposed to go down. Instead, they both collapsed, to show you that these sort of ETFs are so risky and so dangerous that you want to avoid them, and these that I've listed earlier are eliminated. Don't be in any more triple ETFs that are out there, because they also risk of exploding, malfunctioning at some point. Stick with regular ETFs, stick with individual stocks, and if you want to beat the performance of, let's say, the GDX ETF, instead of taking leverage positions, you can just buy small cap mining stocks, because they tend to go up more when gold stocks go up. And that's one of the things I'm doing. So all that said, one quick little commercial break, and then we'll be speaking with Jordan Roy-Byrne of the website thedailygold.com.
Carmine Savastano, Human Time Bomb, The Violence Within Our Nature, poses significant questions and considers the evidence that violence shapes the past and present. Author and Professor David T. Beato calls it an impressive tour de force. Savastano shows a mastery of relevant work in biology, anthropology, and intelligence. Each chapter will challenge readers to rethink old assumptions. Doctor of Psychology R. Blackstock notes, "It is a long, hard look into the potency of our collective shadow that is extremely relevant in today's socio-political climate." Historian and author Larry Hancock declares, "This work is a slap on the back of the head, a wake-up call, and a serious reality check as to the true human condition." Order your digital and print copies now on Amazon.com. For more information, visit tpaak.com.
Well, how you doing today, Jordan?
Hey, I'm well, Mike. Thanks for having me. Oh, for sure. It's some interesting moments in the financial markets. The price of gold, as we're speaking, is right around 1800. It's briefly gotten above that on the spot price. And it's exciting to see this. Gold is outperforming the stock market. It fell less when the market fell in March, and is testing all-time highs. But some people are very concerned. I'm getting emails from people worried because it's near an all-time high, and and last time in 2012 it was at this level, it topped out and gold stocks crashed. So should people be concerned of a crash coming?
No, I don't think so. I don't see any worry about that. I mean, technically, the day we're speaking, this is Thursday, Wednesday, gold closed above 1800. We have a bit of a reversal to the downside today, but you look at how gold closed the end of June, which is also the end of the quarter. It closed at a new all-time high in quarterly terms. So now to make a new all-time high in monthly terms, I think it has to close above 1830, but don't quote me on that. But basically, that's the highest quarterly close that gold has ever made. And that's, when you're making that kind of a close in quarterly terms, that just bodes very well for the next couple quarters that gold should continue to rise. So there's more resistance at 1800 than 1900. But short term, my view is I'm looking for a run to 1900 where there's technical resistance there. But, bigger picture, Mike, fundamentally, gold is driven by real interest rates. And if you go back to 2011, what happened is, after the financial crisis, the Federal Reserve, they pushed rates down to zero. And then we saw a rebound in inflation and inflation expectations. But then what happened is after 2011, inflation and inflation expectations, it really started to peter off and start to kind of stabilize and go down. And so you had that happening. The Fed was at zero rates for the next couple years after that, but there wasn't any, they couldn't go any lower. So if you're looking at real interest rates stopped going down in 2011, and they rebounded for the next several years. And that was the fundamental explanation for the bear market. Here and now, Mike, there's rates really, I guess they could go negative, but let's just presume they can't go any lower. So then the driver has to be inflation and inflation expectations, which is, pretty low as it is. So, if you look at the action in markets, I think they're telling you that inflation and rising inflation is a lot more likely than deflation. So with that said, fundamentally, I just think we're at the beginning of this move, and, we don't have to worry about a 2011, 2012 scenario.
Well, what about simple dips, like say to the 50-day moving average, which right now is around 1740? I don't know if it's going to fall to 1740 right at this second, but you do get occasional dips to these moving averages, even in a bull market, multiple times a year.
No, absolutely. That's very possible. And we could be getting one of those dips now. Looking at gold, it has had a pretty good run over the last month or two. But, Mike, we've seen a stronger run in the stocks, and that's a healthy sign for the bull market. So, you could see a quick pullback for a week or two. And when you're in very strong trends, the pullbacks you tend to get, they tend to be swift. Like, they tend to happen pretty quickly, and they can be sharp. So I think that's something to keep our eyes on as far as pullbacks. I don't see a major pullback here for the miners, but if they keep rising without much of a pullback for the next couple weeks or month or so, I think there are some points I'm looking at where we could see a larger pullback. But at this point, I'm not worried about that big of a pullback or like a real sustained down leg.
Well, excuse me, you put a real interesting article up on your website on July the 4th, titled "Early Signs of What's Coming in Juniors," and I'll link to it with this interview so people can look at it themselves. But what do you think is the outlook now for these junior mining stocks?
Well, I think the outlook is really good. And the reason for that, I mean, we've talked about the fundamentals in past interviews, but, technically, Mike, and I can't recall if we discussed this in an earlier interview, but, I would get the question, when do you think the juniors are going to take off? When are these small juniors going to accelerate to the upside? And my view was that could happen when GDXJ breaks above the 2016 high, and also when gold breaks above 1800. So, at the end of last week, we had GDXJ break above its base and its 7-year resistance and make a new 7-year high. And, that in addition, in the last couple of days, we've seen gold break above 1800. There's a lot of resistance there. So I think the market's breaking those levels has ushered in to some degree, more momentum in the sector and a lot more speculation. If you're just looking at various individual juniors over the last couple weeks, you can see that capital has really started to flow downstream. It's flowed into the smaller names. So you go back a couple months, after the COVID bottom in March, the money was all going into the large caps for the most part. They were really outperforming. Now the capital has shifted downstream, and we're seeing juniors outperform, and we're seeing smaller juniors really outperform to a large degree. So I think the outlook, there's a lot of momentum here. And like I said, we could be having a little pullback here. But bigger picture, given the fact that GDX and GDXJ just made a 7-year breakout and have measured upside targets technically that are significantly higher, the next year or two really could be a chance. It could be a wealth building phase here in precious metals and juniors especially.
Let me ask something this may sound like a funny question or a dumb question that to you at least. I got an email a few days ago where someone asked me if they should buy GDXJ. They said that they own GDX and then a list of some other stocks. And they said, should I buy GDXJ? They want to buy more. And I haven't replied to the email yet, so they probably think I'm being a jerk. But the reason I didn't reply to it is that I used to own GDXJ years ago, and then it malfunctioned at some point because they rebalanced it and they took some holdings out, and so they had some thing where the stocks had to be above or below a market cap level, and then they made all these changes and made the thing dump, and after that happened, I stopped paying attention completely to that ETF and have never bought it ever since. So I don't know what's going on with it. So that's why I didn't answer the guy's question. But so I'm going to ask it to you. Should people buy GDXJ or this other ETF that you list in your article, which I've never heard of before until reading your article? It's brand new. The GOEX ETF, Global X Gold Explorers ETF. So what do you think of these ETFs?
Well, I think the malfunctioning that you speak of, I think that was more in the 3X ETFs, which, you've talked about in past interviews how dangerous those are to hold for a long amount of time. GDXJ, I think it was in 2017 when they had the rebalance. And I think it pushed the market down a little bit, but GDXJ was not, at that time, it was not really in a bull market. So I don't know if the weakness was really entirely attributable to the rebalancing. I'm just not sure it was that. I look at it, I didn't think it was that big of a deal. So I think the malfunctioning and the risk of these ETFs is more, it has to do when you get into the leveraged ETFs. So I think right now GDXJ is a simple way to play the sector. And I've always said, if you don't have a lot of expertise and you're just getting involved, buy GDXJ, buy silver, buy gold, and you should do that. Hold those, add to those every month, dollar cost average, and you can study and learn a lot more about the sector and individual companies. And when you become more learned about that, then you could possibly go into the individual companies. But I like buying GDXJ kind of as a simple route to participate in the bull market in the sector if you're just coming into the sector and you don't have a knowledge about it.
Yeah, that makes a lot of sense. And like you said, I think it was like 4 or 5 years ago. What I'm talking about, and it's that when it fell, and it basically kind of reinvented itself. It changed its holdings, but that's nothing like what has happened in March with JNUG and these triple ETFs. In fact, I just read this morning that there's a whole slew of triple ETFs that are being completely delisted, including USLV, UGLD, DGLD, and DSLV, and TVIX, which is an extremely popular one. So all these ETFs are now being destroyed completely. So that's just another reason for people to avoid any other of these triple ETFs in my mind.
Yeah, I mean, that's unfortunate. I hope people didn't get hurt by that decision.
Yeah. Well, the thing about this sector, the mining stock sector, is there's no reason to do the leverage like that when you can buy these small cap junior mining stocks, which we've talked about before, that can go up just as much, and they don't have those leverage things. But do you know anything about this Global X Explorers ETF? What that's about? I've never heard of it, and it's only got a market cap of, it looks like 46 million, so it's brand new.
Yeah, I think it's a smaller ETF, and it has a few more explorers than GDXJ. I mean, if you look at GDXJ when it did the rebalancing, it kind of went for bigger companies. So GDXJ it has mid-tier companies in it. It's not a perfect junior ETF. And GOEX has a few more exploration type companies in it. But I think, with the liquidity, you're probably safer in something like GDXJ. But I like looking at both just as it helps me analyze the sector. And it was just interesting to me how both broke out to 7-year highs at the same time.
Oh, for sure. Yeah, it's real interesting how they're acting and doing. I mean, there's so many of these ETFs. Now I see another one I never heard of before, Sprott Junior Miners Gold Miners ETF. I don't know. It's only got a 72 million market cap. I don't know anything about it. I guess there's just more and more of these things being made. Ring Global Gold Miners ETF. That one's got a 450 million market cap, so there's more people in that one. Well, anyway, I'm just looking at this junk on Yahoo Finance, so I'll turn it off.
Yeah, there's a whole number of those.
But yeah, so what's your kind of, I guess, one more question. Do you think seasonal trends will have much of an impact as we enter the summer?
I don't pay a whole lot of attention to seasonality. I mean, there are certain trends where typically if gold's in a bull market, what I've noticed is you typically get like a low in June or July, and then the market kind of heats up in August and then breaks out in September. So we're looking at, how the market closes tomorrow will be interesting to see if gold and silver they broke out on the daily chart, but we have to see, are they going to break above 1875 and 1800 on the weekly chart tomorrow? So that's something I'll be watching. I mean, if the metals were to kind of go sideways for the next month or so, the seasonal argument would be that they're really not going to make a huge move higher until the end of August or September. And I guess, I mean, it's a possibility. The stock's really overbought here, but I still think, Mike, that the bigger risk is being out of this market. And you don't want to chase things that are really overbought, but at the same time, if you have a good entry point in something you like, take advantage of that. Don't try and wait for that entry point to become a perfect entry point. Odds are you might lose it and the stock might go a lot higher before you can buy it.
Mm-hmm. Mm-hmm. Well, as we wrap up, could you tell people what they can get if they go to your website, dailygold.com?
Yes, I post all my free information at thedailygold.com. There's editorials, interviews like this. I do some video commentaries. You can opt in there at the top to get a copy of my free book, which contains all my thoughts on precious metals. And then you'll get on my email list, and you'll hear from me about once per week, just about my thoughts on the sector and some snippets from my premium service.
Great. And I get them and subscribe and read them and follow what you're doing myself. So thanks for taking the time to talk to me and my listeners.
Hey, my pleasure, Mike. Thanks for having me.